The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Just after 9 a.m. Eastern Time, Monday morning. We got about 24 minutes to go until the start of trading, and you have a little bit of a mixed market right now. We have gold trading higher yet again, inching towards all-time highs. We have the S&P right now up by 7 points, and we are right next to all-time highs, man. We're talking about, 60 points right now, about 1% away from all-time highs, and that is after trading down to a low of 51.20. We pick things up. We are 540 points above that low that we made just 3 weeks ago. That is a run of more than 10% off of those lows, and we are just 1% away from all-time highs right now. Quite the week last week in terms of Jackson Hole, Chairman Powell, 10 a.m. Eastern Time on Friday. You see the volatility on Friday, right? Backing things up for a moment. Pretty interesting. And folks, you got to love technicals, okay? Thursday, the high, 56.65. Where do we spike to? 56.62.25. Within 2 points. Where are we this morning? About right at that same price level. Now, you talk about volatility, man. We traded from 56.60 down almost 60 points, got it all back almost by the end of the session on Friday, and we're right back at that price point right now, 56.61 in the S&Ps. NASDAQ 100. A little bit of a sell-off in the last couple hours as we came into the 9 o'clock hour. We were trading at 19,850 almost at that price point overnight. We're just off that price level. NASDAQ 100 off by 20 points. You got the Dow up 68 points right now. You got the Russell up by 17. Bitcoin. Excuse me, folks. Yeah, a little bit of a cold that came on the last 24 hours. Hopefully we shake it. Bitcoin up $5. You popped to 65K on the futures last night. We trade off a bit. You're basically flat on the weekend. How about crude, right? You talk about it, man. Crude. $71 on Wednesday, $77 this morning. If you are looking to fill up your gas tank, go get it filled up because it seems like we got a little bit of higher prices coming at you. There's your gold contract, $25.58 right now. Thursday, we're at $25.06. You see the volatility on Friday, and what do we got, right? We got a Fed that says the time has come to cut. The market says we thought that was going to be the case, but thank you for confirming it. And as we've confirmed it, we've seen higher price and lower yield. Now, we got a rollover in the futures, okay? So don't be distracted by the fact that we just spiked from 113.24 up to a price point of 114.12 on the rollover. Okay, you see the dotted line here going to ZNZ24. Looks to be the active contract right now. When you back things up on a daily, you can see that we were at ZNU, was the active contract for the prior 3 months. We're rolling over on the quarterly. We roll over. Nonetheless, you got higher price, lower yield. We're talking about right now a yield 3.78. Say goodbye to 3.8%. Say goodbye to 4%. We were at 5% almost. No, we're at 3.78%. The yield on the 10-year. Pretty remarkable, right? When you take a look at where we are on the yield curve, okay, 10-year, 3.78, as I mentioned, and again, we're seeing lower yield today. You take a look at the 2-year, 3.89 is where we're sitting. The 30-year, just above 4% right now on that yield curve. Pretty interesting when you look at the 2-year. Right? Think about what the 2-year is saying with what the market is pricing in. Found myself thinking about this weekend. It seems like the market is getting a little bit ahead of itself in terms of where the Fed is versus where the market is, right? In terms of where the wording was from the Fed, the chairman, and anything can change. We get jobs data in the beginning of September. We have the next Fed meeting where they're expected to cut September 18th. If the data speeds up and this economy seems weak, and that is what this market is probably betting, okay? The market is getting ahead. The market is forward-looking. They're making guesses, for lack of a better term, bets, guesses, wagers, okay, investments, call them what you like. But right now, the overnight lending rate is about 5.25%, okay? So you can get risk-free right now 5.25%. They're probably going down in September to 5. So think about that, though. You're guaranteed, at least for the next couple weeks, you're going to get 5.25. They're probably going down to 5. That's a 6-week span you're going to get. So you have at least 2 months right now where you're guaranteed to be getting 5 to 5.25. Not guaranteed. Fed can do anything September 18th. Not a good use of that word, right? But all things considered, it's very likely that for the next couple months we're going to be sitting at around 5. And look at even the 1 year. The 1 year is at 4.37. Well, if you're going to buy a treasury at 4.37, when you can get right now for an overnight lending rate of about 5.25 to 5% when they come down in September, what is that implying the overnight lending rate is going to be 9 to 12 months from right now? That's implying the overnight lending rate is going to be far below 4.4% in the span of a year. And that's 3 cuts. So yes, you better believe it. But it is interesting, even on the shorter term basis, where these yields are. I mean, look, the 1 month's at 5.3, but how quickly we get to the 4 range. Between 1 year is 4.4, we'll call it, and the 2 year right now is sitting at 3.89. The market is pricing in a lot of cuts. We'll see if it's gotten ahead of itself, as it has many times in the past. You don't have to go back that far. You literally got to go back only 4 months. It has been quite a trip for fixed income as we have lower yields coming at you. The economy's remained pretty resilient. And we're coming into the long weekend. So we're coming into the long weekend in terms of Labor Day. We come back from the market. We get jobs a week from this coming Friday. So what do we got? We got 5 days. We got a 3-day weekend coming up. And then we come back for 4 days where we get the jobs number on Friday. And then 3 weeks from this coming Wednesday, we get a Fed decision. So we'll see where we go. But it's going to be interesting stuff, to say the least. We jump over to the dollar index. Now, in coordination. Now, what do? We looked at that run began basically in the middle of April, right, when we had yields approaching 5%. You got quite a little pop into July 1st, and then boom, it has been a meltdown. The dollar trades from 106 to almost 100 in the span of 2 months. That is a vicious move in currency markets, folks. I always talk to our man Teddy Kegstat. If you haven't checked it out, that's every Wednesday at 40 past the hour. And one of the things Teddy's talked about, man, check out the tight trading range the euro US dollar has been in, right? And you compare that to some of the other currencies, even something like the dollar, the rip-roaring decline the dollar has had recently. Yes, that's tied into the move you've had in the euro, but it is interesting, right? You look at something like the euro, this is a 3-year weekly, and then you compare that, and I'm jumping around in the beginning of the show, to something like the dollar, okay? And yeah, it's pretty close actually when you take a look at it. But the point being, we are approaching breaking this consolidation that we have been in for almost 2 years, folks. We got into this area. I mean, you could even back this up a little bit further, right? When did we get into this area that you chopped around in for almost 2 years? And we are pushing the bottom boundary line. The real test here, you're going to back things up, 99,589. So we're about a point away. That's the lows of 2023, but you can see challenge in the lower area there, and that's correlating to how the euro US dollar is over here challenging the higher area. So, and it would make sense, right? When you have dollar weakness, you're going to have euro strength. The euro trying to break out of that area. Similar action. You're trading into the highs of July of 2023. In the euro, you're looking at 112. We're at 111. And the dollar right now sitting right at above 100. We got a lot to talk about, folks. It's Monday. We'll get into some equities. When we get back, we'll talk some gold. Pushing all-time highs as well. Don't go away, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 6 points right now. We jump around to that gold contract. So I remember when I was on the air, when this was hitting 25.70. We back it up. Yeah, 9.30. Because I remember mentioning, hey, gold's never traded. In the history of human civilization, never traded. Where it was at 25.70, well, we're just $10 off that price level right now. We're trading at 25.60. It's been quite a run for gold. We take a look at gold on a longer-term basis. You start this acceleration in September, you chop around for a bit, and that was quite a little chop around. We put it back on the daily. What did I do? Just went back to the S&Ps. There's my gold contract. Yeah, you chop around for the better part of almost 4 months, and now we've broken away from this area. But, boy, you really want to talk longer term, okay? You take a look at the potential A to B, C to D, and this is where I'm in technicals again, okay? You think it's a coincidence that this thing chopped around, pushing all-time highs, 1923? Yeah, you can call it a general area, okay? It's an art, not a science. But, yes, we were pushing that 2000 area. You made it to 1923. Pretty remarkable that you never made it to 2000 back in 2011, right? So close, within about $60 to $70, $80, $77 to be exact. We trade to 1923. But the point being is, you want to run an A to B, C to D. Your A point starts at about 250. Your B point, for simple math, call it 2,000. You're going to be just shy of that number. But you're talking about a 1,700 point A to B leg. And if you take the 17, maybe your C point is somewhere around 1,000, just above it. You're talking about maybe 2,750 or so, maybe 2,800, which is remarkable that that's where the run would finish. And now that is if you're running your C point off of 2015. Okay, the other argument you could be made, our man Bud Rolf's thinking him, you had channels, right? How big this thing moves. Well, you had a $1,700 move. There's nothing saying that this thing couldn't pop 1,700 from 2,000. So you're probably trading somewhere between about 2,800 and 3,800. Quite a range, right? Depending on how we react. But when you take a look at where the dollar is, we have I just showed you on the dollar, and I know I'm jumping around, man, but this is where the things I was thinking about this weekend. We have pulled back dramatically from 106 to almost 100, okay, in the span of basically a month and a half, 2 months. But on a longer-term basis, the dollar has traded below where we are right now every single day for the last 22 years, except for this bout of COVID that we've had. Look at that, okay? You were down to 70 in 2008. In 2014, you were sitting at 80. You were sitting at 90 on a couple occasions. Back in April of 2018. Back in March of 2021. Even on the highs, you made it to about where we are right now. That was a high. That was king dollar, baby, trading at 100. Point being, we could definitely see some pullback here depending on how far and how fast the Fed cuts, and depending on what happens in Europe, of course. But wouldn't be outlandish. And again, on the same way, there's your 10-year. All right, now you want to see it, though. This would be the disclaimer there that, yeah, you got the 30-year, okay, sitting at about 4% right now. But boy, anytime before 2008, we had the 30-year with a higher yield. Okay, we've been in this recency bias that rates have been near zero. I don't think we're going back there. We're not going back there in a healthy economy. Let's put it this way, okay? We are higher for longer right now if the economy stays healthy. If the Fed is late to the party and there's lag, yes, they're going to bring it with cuts like they always have, okay? But not in a healthy economy. We've seen the generational bout with inflation. They don't want it to happen again. It is pretty remarkable, in my opinion, with everything we have going on, okay, with AI, with the markets, a rocket ship, and meanwhile, we have the 10-year at 3.8%. Seems like we might be able to handle higher yields for some time. Nonetheless, the main event of the week this week is going to be NVIDIA with their earnings after the bell on Wednesday. We got NVIDIA right now trading basically flat. You're up by a few pennies. We're trading at 129.37. Now, you talk about buying the dip, man. NVIDIA, you back it up. $90 on that August 5th low of the markets. You got NVIDIA trading up $40 since then from 90 to 129. Now, you got the S&Ps up 10% over that period of time. So not surprising, a stock like NVIDIA, multiples to that degree, but you got NVIDIA. They'll have their numbers, excuse me, after the bell on Wednesday. And what's interesting here is you're looking at about, let's, come on, data. Excuse me, folks. Just trying to look at where this equity is priced in terms of volatility. We'll pull that up. Not sure why it's not cooperating. But there's going to be an extreme amount of volatility priced into their earnings. Some of the other equities got Wednesday. Wednesday's going to be a big day, man. We got CrowdStrike. Talk about a rebound from 195 to 280, this thing. There's your 3-year weekly, okay? You collapse on that mishap with Microsoft where they bring down the global internet. We'll call it a mishap. Stock gets cut in half in price from 400 down to 200. We bounced to 271. We take a look on a Fibonacci basis. Let's put this back on a daily just to see where we're sitting right now. Yeah, right at the 382. So CrowdStrike going to be out with their numbers on Wednesday as well. We also get Salesforce. Salesforce sitting at about 264 from a high of 318 earlier this year. On their last earnings, Salesforce plunges down to about 212, but they'll be coming out with their earnings on Wednesday after the bell. I appreciate Jimmy posting all those great earnings into the Tiger's Den. If you haven't checked out the Tiger's Den, folks, check it out. The front page of TFNN. Yeah, we got a couple good companies out there. We got a lot. We got Chewy on Wednesday. We got Kohl's in the morning on Wednesday. Foot Locker on Wednesday. Yeah, Thursday we got Best Buy out there. Burlington Coat Factory. 1-800-Flowers. You got Dell Thursday after the close. Lululemon, Ulta, Gap, Autodesk. We've made it through the big ones except for NVIDIA. They're going to be the main event. So especially the fact you get NVIDIA, you get CrowdStrike, you get Salesforce, we get Affirm. Yeah, and you get HP in there, and you get NetApp. So Wednesday after the close is going to be a big one, man. Salesforce right now trading at 264. All right, we jump around. Pinduoduo. Come on, what's going on with my charts right now? They're not cooperating. Well, I'll pull up the headline. Yeah, Temu is not quite cooperating like the market would hope. Pinduoduo, PDD Holdings, down 18% after Temu posted disappointing revenue and warned of declining growth. I tell you, I downloaded that Temu app. I had to check it out. All right, I'm not sure what's going on in my charts. Come on, charts. It says I got real-time data and they're not loading. Yes, everything was super cheap, but it felt like I was in like a video game for retail where everything was spin a slot machine to get 99% off a product. We'll ship it to you for $1. It felt like it was like Scam Central. I couldn't buy anything. I was like, is this a real deal? We'll talk a little bit more when I get back. Maybe they've seen the peak of their growth. Pinduoduo down about 20%. We'll come back for the opening bell, folks. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we have data, but we don't have charts. Not sure what's going on with Thinkorswim right now. They're going to get their deal together going on, but we get the S&P's up by 10. Charts aren't loading, but the data is coming in. We get the NASDAQ off 34, Dow up 84, Russell up by 13. We got crude right now up $2.60 at 77.43. Gold contract up $15 at 25.61. We got 30 minutes of trading. We might hit another all-time high, only about $9 away on that gold contract. And yeah, so talking about Temu, I mean, this is, not a disaster of a miss, but when you are a small growth company that is valued at multiples that are just bonkers, this is what can happen when you miss. You go down 20%, okay? They had revenue of 97 billion won, okay? The market was looking for 100 billion won. Now that translates to about $13 billion US. Net income was 32 billion compared with 27.5. I mean, look at this company like the market looked at the beginning of Amazon. They do not care that you took a little bit extra money to the bottom line if you're not growing to the degree that they thought. You're only taking in 13 billion in the quarter. What's Amazon taking in a quarter? 100 and something billion, right? They need to grow the top line, and then they'll figure out how to bring it to the bottom line, which Amazon did so well. That's where the multiples come from. You have the CEO out there, co-CEO, the founder, co-founder, repeatedly highlighted growing competition in the global e-commerce market in a post-earnings call. Not what you want to hear from the co-CEO, right? He warned the company's profitability would be hurt as it invests more in supporting its merchants. Now, I mean, Amazon is launching a similar type of a product. There's been news reports over the last few months. PDD has been spending big on e-commerce business Temu to drive its global presence and escape an ailing Chinese economy. I mean, I see ads for this thing everywhere, man. It is just bonkers the last 6 months or year or so, how they have been advertising everywhere. I had to pull up the site. Let me see if I can pull up what comes up. I pulled up their app. Yeah, and this is what I'm talking about here. Up to 90% off. Everything seems almost too good to be true. Yeah, look at, they got Post-it notes. Not $34.99, marked down to $3.59, an 89% savings. I had the slot machines that start spinning every time I pull up their app. I mean, just if you've never experienced it, right? This is what the site looks like here. You got $11 for shoes. You can see why people love it, man. Some of the products here, okay? Yeah, you want a 8-in-1. 8-in-2 hub for your USB? No, not $60. We'll sell it to you for $6.98. You want some jewelry? We'll give it to you for $2.96. And then the running jokes are, of course, online that you buy it from Temu and it's a shoddy product, okay? But I'll tell you that I pulled it up, I started taking a look at it, and I was pretty turned off by the fact that it seemed pretty scammy. And I didn't trust it, okay? Even to the tune of not trusting it to the degree of spending a few bucks on something that's supposedly 90 or 95% off. How big is that market actually? Maybe their growth is not something that can continue on the pace that it's at, right? You want 40 sponges? How about $2.24? I mean, you can see, right? You don't have to be a retail pricing expert to understand that 40 sponges for $2 is a heck of a deal. But sometimes things aren't always as good as they seem. And maybe that's the case going on right now. You got some decorations out there. You got a 2-foot LED ghost tree, $12, right? Yeah. But do you trust it all coming from China? That's the part that comes into here. Pretty tantalizing. Nonetheless, let's see if we get some data. Not yet. We're going to have to do the whole show with no charts. I was almost going to restart it. We're not sure. Somebody in the den was talking about John in the den letting us know, yeah, that it might not just be me. For some reason, I haven't had this one before where I actually have data. It's showing data. Yeah. Yeah, exactly. And our man Dan's in there saying, unless they're made in a factory that doesn't do any lead testing, I don't know where they're getting made. And that's kind of what comes up. Folks, if something's too good to be true, it usually is. We'll end it on that, okay? And that's the experience I got on Temu. I said, man, they're pumping out 95% off savings for deals that are $2 that can't be good because it's just too good to be true. And I don't trust. Why am I getting these products? Where are they coming from? Are they worth it? And you know what? I said, you know what? This is just, I don't get this. Yeah, we might have to do the rest of the show with no charts. But that's all right. We'll get through it, folks. We got some articles to take a look at. Let's talk a little bit of pricing. Let's talk a little bit of groceries. So the trial begins today in front of the FTC. A hearing, I should say, not a trial. Federal hearing begins Monday. whether they're going to let Kroger and Albertsons come together. Yeah, and tell DPT to pull up the program. Tell them. Somebody tell them in the program, folks, in that chat that we're having a few problems out there. Yeah, but we'll get it done. So yes, this is going to be an interesting one to see how it plays in, and it's part of the problem that's going on, I think, when I read an article like this, is that, okay, they're not going to be a monopoly in grocery, Kroger, Albertsons. Walmart's a behemoth, man. Excuse me, folks. And you got Amazon. Let me get a little sip here. This cold just came on like the last 24 hours, man. Kicking my butt a little bit, but I'll get over it. Kroger Albertsons deal heads to court with food prices in focus. Tough to argue that they're monopolistic, but the flip side of that is it's also tough to argue that a merger of this size in a market that's dominated by 2 or 3 players, as in Walmart, Amazon, Walmart's control of groceries alone is just a behemoth. It's a $24.6 billion deal. Federal court hearing in Portland, Oregon starts today. The FTC alleges the tie-up would lead to higher grocery prices for consumers and lower wages for their unionized workforce. And what's interesting here is so that they've pledged to spend $1 billion to cut prices if the merger goes through, and another $1 billion improving worker pay and benefits, and $1.3 billion on store conditions. That is pennies on the dollar of what type of money they're dealing with here. Okay? I mean, think about it. That's 1/25th of the purchase price. Okay? That would be like trying to buy a company for $1 million and saying that you're going to spend, $40,000 on cutting prices, right? 1/25th. And they do it 3 times or so. But they shouldn't. Anyway, it's tough to imagine that that's not how it's going to play out, but they got some competition. That's where there's a fine line. Everything has some nuance on both sides. And we'll see how that plays out. But not exactly in the best interest of everybody that you have these giant retail consumer-based companies consolidating, and there's only going to be a few players in the industry that you're competing with because more competition is better. And now they're arguing that they need to merge to compete. And listen, that's a real deal. We're going to see how it plays out. I'm interested to see some of the arguments they make in here, because you better believe you got to compete, man. I love Walmart, man. Sam's. I do a lot of grocery shopping at Sam's these days. Yeah. Thanks, John. I'll check it out. We're going to try and log out, log back in, see if we get some charts. Either way, we got a lot to talk about, folks. We'll take a look. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We do have some charts here, and I had to restart Thinkorswim twice. If you're out there using Thinkorswim, I appreciate the heads up, John. And I did a restart once, didn't quite get it happening. Did a restart twice. If you're out there having some problems, give it a couple restarts. Hopefully that gets you fixed as well. But we take a look at the charts. You have the S&Ps spiked to a high of 56.69. So what? Within about 50 points of that all-time high, 56.69 right now. We spiked to. We're still positive by about 8 points right now. You get the Dow trading higher by 127, 41,397. Russell gives up a little bit, and you get the NASDAQ gives up a little bit on the open as well. Slightly in the red for the NASDAQ, off 28 points. We check out that gold contract. $25.60 right now, about $10 away from all-time highs on the gold contract. We check in on notes and bonds. A little bit of a pullback. So pretty much where we kicked off, you got the 10-year basically flat right now, and that is correlating to a yield. What are we sitting at? 3.8 on the dot. 3.8. We were at about 3.78, so 3.8. Pretty low yield, all things considered, where this market is. We jump over to gold. As I mentioned, 25.60. We keep our eye on NVIDIA. As I mentioned, they'll be in focus, up almost another %. Check it out, man. Going to be interesting to see how NVIDIA trades into their earnings Wednesday after the bell. And we jump over. So you want exposure through Friday in NVIDIA? $15 in either direction. That's what you're going to be paying. Okay, so that means if you want an at-the-money call and put, cut that number in half, you're looking at about $7. Pretty interesting, right? We slide down, you're at about 130. There's your puts, there's your calls, about $7 in either direction, and that gains you exposure through Friday's close. You got Wednesday earnings. It's interesting. You compare it. So what do you got? You got $14.53 implied volatility in either direction, and you can see that you want exposure through September 6th, which is interesting that includes the jobs number, okay? Look how much volatility is priced into NVIDIA around their earnings when if you go out one extra week, you're only adding about $2.75 of implied move in either direction, and that's another week of trading, which includes the non-farm payroll report. Now, it's only 4 days of trading because the market is closed a week from today for Labor Day, okay? But you have an extreme amount of volatility. What's that? 12%, 11% priced into NVIDIA for their earnings after the bell on Wednesday. But today, we're up about 1%. We jump around to some of the other FANG stocks. Magnificent 7 as we kick things off. Excuse me. Amazon shares, you're slightly in the red by about 0.4. You got Apple shares. Talk about some volatility on Friday with Apple. From 228 down to 225. We're trading right now barely in the red for Apple, down about 0.2. Now, Apple, so they've got an event September 10th. When is that? 2 weeks from tomorrow, that they'll be announcing the new iPhones. Usually what happens is that means they'll be in stores by about September 20th is when you'll be able to buy those. So you got the new iPhones. You're going to have watches, I think, on there as well. It'll be the biggest product launch they have going on, the iPhone 16. AI features going to be built into that as well. Sometimes, what do they say? Buy the rumor, sell the news. Be careful on Apple, because this entire run-up, folks, okay, not the entire run-up. You got a lot of AI in here, but a big portion of this chunk of the acceleration that Apple has had is that they are in a super cycle. And you've had the analysts come out and say, listen, this is going to be a real reason for people to upgrade. They're in a super cycle upgrade. And yeah, you just traded from 164 to 226. We've done this before. Apple added almost $1 trillion in market cap from where they were just 4 months ago to that high of 237. Then you trade back to 196. Remarkable the volatility you're getting on a market cap basis for some of these huge companies. But nonetheless, so they'll have their event on September 10th, where they'll announce the new iPhones. And as I've talked about, I think it's time for me to get a new iPhone. Going on about 4 years. And with the super cycle and some of the AI features, my battery's being a little bit persistent. But about 4 years, it might be time. I think I have an iPhone 12 Pro Max. And so maybe I'll get $100, $200 on the trade-in on that on top of it as well. We'll see. We jump around to some of the other Magnificent Seven. Microsoft. Yeah, you get the NASDAQ down about 50 points right now. All these stocks a little bit in the red. Microsoft down about $1.50. We jump over to Tesla. Tesla down 1.4%, down $3 to $217 right now. Some of the other chip stocks, AMD, up about 0.6%. The dog in the industry, Intel, down 0.7%, or 15 pennies to $20.39. We jump over to Google. Google shares basically flat after trading positive in the open right now. All right, and then let's jump to a little bit of rates, right? So the headline out here. Powell's pivot leaves traders debating size and the path of the rate cuts. Now, I like pulling this tool up just for a little bit of perspective. CME FedWatch tool. All you got to do, folks, is just Google CME FedWatch, and you'll be able to find this tool. It's pretty much the top result, I think. The September meeting, where are they going? It's about a 2-to-1 proposition that they're cutting by 25 basis points. There's still a 35% probability that they're cutting by 50. That is a huge chunk considering the verbiage that we've heard from the Fed, in my opinion. Where it gets more interesting is you go to the end of the year, you go to their meeting on December 18th. So in 3 meetings, where's the market think they're going to be? Folks, check out this one, okay? Right now, excuse me. Now remember, right now, we are at 5.25 to 5.50, okay? By December, the market thinks that there's only a 1 in 4 chance that they go 25, 25, 25. There's a 50-50 chance that they sneak in a 50 cut somewhere, that they go 50, 25, 25. And there's actually a 1 in 4 chance that they actually cut by 1.25 points. That would be 50-50-25, or maybe 50-25-50. That's not where the Fed is right now, man. Doesn't mean it can't happen. We've seen how quickly 3 or 4 months can change this market. But be aware that this is where the market is positioned. So where is the risk reward right now? In my opinion, there's a dramatic risk right now that the market's ahead of itself yet again, right? That we are in a higher for longer period of time, that the economy is remaining resilient, and that the market is pricing in 4 to 5 cuts. I mean, think about that. There's a 75% chance, approximately, that they are going to cut by at least a full point by their December meeting. How does that happen? I don't know. The market could be wrong. The Fed could be wrong. We're going to find out. We get one data point next Friday, September 6th. That's going to be an important one to see how quickly they kick things off. But all the verbiage, if you listen to Jackson Hole, some of the speakers out there, I forget which one it was. I don't think it was Bostic out there. But one of the speakers was saying, I haven't quite seen the data yet that says it's time to cut. Square that with the market that says that they're going to begin cutting in September, and over the course of the next 3 meetings, they're going to cut by a full percentage point or more 75% of the time. That is a dramatic pricing in this market. And if it turns out the economy is resilient, well, what's going to happen? Yeah, we're going to see a little bit of a recoil, as we have before, with yields sitting at 3.8% on the 10-year. Maybe we deserve to be a little bit higher for longer. But keep your eye on those economic numbers. We get one next Friday, September 6th, to kick things off. Also going to be important to see how NVIDIA does on Wednesday, whether the AI acceleration is here to stay. NVIDIA, flat right now. We got one more segment. Don't go away, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps holding on to gains, up by 6 points. NASDAQ 100 negative by 60 as the tech stocks, they roll over a bit. We're taking a look at IBM. Now check this out, right? IBM. Gotta love channel lines. Talking about our man Bud Ross twice this hour. Gotta love it. On the flip side, IBM stuck in a downtrend channel that began in 2012 at the high of 206. You trade down to spike lows on COVID. What's that low? 86.50. You transition to an uptrend channel, you break out of that channel, you come back, you test that channel, you accelerate higher as well. Again, this year, we'll put it back to a weekly to see the shorter-term time frame, just giving you some context of where this channel line lines up. You trade at 196.75 right now in the story out there from the Journal. This morning, talking about IBM shuts down the research and development operations in the latest retreat by U.S. companies. And where are they shipping them to? India. Yeah, India's going to be the next juggernaut, man. China's out. We got too much geopolitical risk going on in China. India is the next revolution out there. And yeah, they're moving its China research and development functions to other overseas facilities, shutting down its China Research and Development Department. Latest retreat from the company. from the country by U.S. top tech companies. Yeah, it's going to affect about 1,000 people, most of them working for companies' R&D labs and focusing on the development of testing. And yeah, percentage change in IBM's yearly revenue. Check out the China one. Tanking, right? Global, you're in the positive, but China, yeah. They once saw China as a major growth market, but that is a problem, to put it lightly. And we jump over to Pinduoduo because we got charts going. 26.5%. Be careful, folks. Looks like Temu is not the next juggernaut that's going to take on Amazon and BK them. Growth not there. And boy, when you're a company that's supposed to take over the world and never stop growing, and you start disappointing, the valuations can be swift. The devaluations, I should say, can be swift. And yeah, you're seeing it 26% for Pinduoduo. All right, we check in on the gold contract. A little bit of a pullback. Gold up only $5. We were at $25.60. We're trading right now at $25.51. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. Steve Rhodes with the Trader's Edge. Fast Market at 12. Larry Pesavento. And folks, Larry had an outstanding live trading webinar on Friday with Jackson Hole. You can still check that out on the front page of TFNN. You can gain access to the archives.